Aren't Tesla's earnings surprisingly weak? I know they halted production lines at all factories for a few weeks in Q1 due to the Model Y upgrade, but still, missing the EPS consensus by 37% is huge. Yet the stock gained 9% over the last 2 days. Why is that?
The stock market looks to the future. Tesla's share price rose because the earnings call highlighted 5 key growth drivers with an optimistic outlook.
I'm really curious what they actually said during the earnings call.
Firstly, they eased concerns about a potential delay in the low-cost model. Tesla confirmed that the launch is still scheduled for June as planned. This new model, expected to be priced under $30,000, is generating strong market interest, as its potential addressable market is estimated to be twice the size of the Model 3 and Model Y segment. However, Tesla mentioned that it will maximize the use of its existing production lines, indicating that this model may not be a completely new design. So, there is still some uncertainty about how innovative it will truly be. During the earnings call, Tesla repeatedly emphasized its focus on price affordability. Next, there was a lot of important information about robotaxis. ARK Investments' Cathie Wood estimates that the robotaxi market will reach a staggering $10 trillion by 2030 and projects that Tesla will take 50% of that market. As planned, Tesla announced that it will begin robotaxi service this June in Austin, Texas, and mentioned that several other US cities could be added later this year. Elon Musk defined every Tesla vehicle capable of driving as a robotaxi. He emphasized that even existing vehicles can become robotaxis through software updates alone. He confidently stated that within a few years, 10 million Tesla vehicles will be operating autonomously. Notably, Musk highlighted that the Cybercab, a vehicle built exclusively for robotaxi use, will enter mass production starting in 2026 using Tesla's Unboxed manufacturing process, which is expected to produce one vehicle every 5 seconds.
As far as I know, the product Musk sees as the biggest of all is Optimus. Was there no mention of Optimus?
Yes, that's right. Musk once said that Optimus would be the biggest product in history, 10 times bigger than the next biggest product in history. He reaffirmed the plan to produce several thousand units within this year. However, he mentioned that it is not yet in the mass production phase and that production will likely ramp up toward the end of the year. He expressed confidence in producing 1 million units annually within 5 years.
There must have been a lot of questions about the impact of tariffs as well, right?
Yes, Tesla stated that it has factories in all major sales regions and has diversified its supply chain locally, so it expects to be relatively less affected by tariffs. In North America, 85% of the components are sourced from within North America. In Shanghai, it's 95%. And in Berlin, the level of localization is similar to North America, excluding the battery. However, Tesla clearly pointed out that its energy business, particularly in producing megapacks, will be more heavily impacted by tariffs as it imports LFP batteries from China. Since Tesla began operating its Megapack factory in Shanghai from Q1, it mentioned that orders outside the US will be covered by the Shanghai facility.
Were there any other important updates?
I can share a few more key points. First, regarding Megapack, Musk explained that it's a product capable of doubling the output of existing power grids, and he projected that production could eventually scale to several terawatt hours. Second, in news that shareholders will likely appreciate, Elon Musk personally stated that starting in May, he will reduce his involvement in the Department of Government Efficiency and dedicate more of his time to Tesla. Third, Musk reiterated the mission he mentioned during the recent all-hands internal meeting, sustainable abundance for all. He posed the question, what's the ideal future that you can imagine? and reaffirmed that Tesla's future lies in autonomous vehicles and autonomous humanoid robots.
Lastly, how should we look at the stock price?
In fact, the consensus revenue growth for the next year is only 9%, while the current forward PE ratio stands at 104x, indicating that the stock is priced very expensively. Ultimately, for those who resonate with Tesla's long-term vision, the stock may appear cheap, whereas for others it may seem overpriced. The 4 red bars below represent the potential upsides from 4 of Tesla's key growth drivers: the affordable model, FSD, Robotaxi, and Optimus. Meanwhile, the blue bar illustrates the potential downside if Tesla were to be valued at a forward PE ratio of 45x. I hope this helps you better understand Tesla's growth story and valuation and supports you in making your own investment decisions. Subscribe, like, ping up.